Welcome to the channel. In this video, we uncover institutional secrets behind demand and supply. You will learn how banks and smart money place bids and offers, how liquidity is engineered to move price, why retail traders get trapped in false moves, and how institutions actually control direction. I am sharing my premium course concepts here on YouTube by myself, completely free with no hype or indicators. This channel is built on real market logic, structure, and risk awareness. Make sure you follow the channel for more institutional secrets and hidden market logic. If this is your first trading video, you are in the right place. Let us begin.
Welcome back, traders, to the new lecture of our SMC trading series. In this lecture, we're going to discuss about demand supply zones, how we can use demand supply zones with liquidity concepts to enhance our trading. So in this lecture, we're going to discuss how demand supply zones work with liquidity. So let's start our lesson. So in this example, you can see prices sweep the recent swing high, also known as the buy-side liquidity. As prices sweep the buy-side liquidity, we can see prices did a break of structure towards the downside. As prices did a break of structure towards the downside, we will simply just find our demand zone. So there's demand zone. Because this demand zone is large, so we won't take that much risk. We'll simply just take the 50% of that demand zone. We will use gain box for it for our aggressive entries. So inside the range, you can see there is also the trend line liquidity. As the prices swap this trend line liquidity, and that price is taken out the recent swing high, also known as our buy-side liquidity. So we'll just take the 50% of that demand because we are not taking that much risk on this trade, so we'll just take a 50% of our demand zone. And this is also known as the aggressive entries. Prices often come to the 50% of demand. So we'll just take the 50% our demand, and our target will be the trend line liquidity resting towards the downside. So this is the trend line liquidity resting towards the downside. So this is another trend line liquidity that has been taken out previously by the prices. So our final target will be the recent swing low in this range. So this was a range, so the previous or recent swing low as a sell-side liquidity will be our final target for this trade. So this is how this trade played. A minimum risk and a maximum profits. Always remember to go break even after 50 to 60 pips to minimize your risk and maximize your probability of getting profits from the market. So let's jump to another live chart example of gold. So in this example, you can see prices swept the sell-side liquidity towards the downside, and after that, prices did a break of structure towards the upside, telling us the momentum has shifted from downside towards the upside. As you can see, there is a trendline liquidity for the early buyers, and this is the SMC trap for the early buyers. The prices will come down to the lowest point of this demand zone, sweeping and liquidating all the early buyers. You can see prices came into our demand, and at that demand, we'll just enter for buys. So this is another liquidity, trendline liquidity, and again, our final target will be this buy-side liquidity or major swing high. So we'll just enter our long position at that demand, and our target will be major swing high. So see the risk and see the profits. Always minimize your risk and maximize your profits. So this was our 1:13 risk to reward trade. On the loss of 1%, you would have just generated 13% on your account. So when trading, only risk management will make you profitable. When you risk small and your reward is big, so then you can be profitable easily. So this was our Friday losing trade, which we lost because there were no confirmation in this trade. You can see I just mentioned this, that liquidity has not been taken out, and we'll just wait for the break of structure, but there were no confirmation and we just blindly entered into the buy position. So I'll tell you every losing trade so that the same mistake you never make in your lifetime. So you can see there was a major swing low resting towards the downside. Also, the trendline liquidity was also remaining, but we just entered blindly into this trade, and we just booked our loss. So you can see this was not actually buying trade, this was actually selling trade. You can see there was a liquidity resting towards the upside, no break of structure, and there was a demand. And you can see there's a break of structure towards the downside and a demand towards the upside. And this was actually a selling trade, not a buying trade. As you can see, we would have just entered an aggressive entry on this selling, and our target would have been this trendline liquidity and the recent swing low. You can see how this trade played. A real quick move, liquidating all the buyers. So this was our Friday mistake, and I hope so you will never make this mistake again in your life, because liquidity is the most important thing when it comes to trade any pair in this Forex industry. So you will have to understand how liquidity works. If you don't know where the liquidity is, then most probably you are the liquidity. So moving on to another trade example. So this is the same trade setup just like the Friday one. This was a trap setup by smart money for early buyers. So I will just tell you more and more trap setups just like this so that you don't make the same mistake again in your life. So you can see there was a buy-side liquidity resting towards the upside, then the break of structure again towards the downside. If prices did a break of structure towards the upside, then we can consider a break of structure. Without confirmation, we cannot just enter blindly into any trade. So you can see there was a demand and another buy-side liquidity, and after the prices tapped into our demand, after breaking the structure towards the downside, we would have just entered into the selling position, and our target would have been, again, this range, sell-side liquidity. So you can see how quickly the prices moved into our TP. So this is another 1-to-8 risk-to-reward ratio trade setup. So just like that, on the risk of only 1%, we would have just made 8% on our account. So this is how managing your risk can make you profitable. Even if you lose 2 to 3 trades, you can easily just recover into another trade. So moving on to another trade example. So in this example, I will tell you how to trade news in gold. And I will tell you one most common mistake that every trader make while trading news. So in this example, you can see prices did a break of structure, and after break of structure, prices swept the sell-side liquidity. Now, we have to find a demand zone to sell our position. So in this example, you can see we just found a demand zone, so the demand is so large, so we won't risk that much, so we'll just take an aggressive entry while trading news. So we have drawn 50% of our demand, so our final target will be this remaining range, sell-side liquidity, and also the trendline liquidity that is remaining. So always remember one thing, always make liquidity your target points, not your entry points. So this was the mistake that we made on Friday. So this is another mistake that traders make while trading gold on news. They don't give space to their stop loss. So always give some space to your stop loss, 5 to 3 pips. You can see prices just significantly moved towards the upside and then dropped so quickly, targeting the remaining liquidity. So always remember to give some space to your stop loss while trading gold on news. So this was the final lecture of our mentorship. Practice those concepts on live charts. Watch it multiple times to master these concepts. So there will be much more coming into our premium group. I will be updating you with my trade analyses also. Take care and practice these concepts on live charts. Trust me, you will never find these concepts anywhere else. And if you found anything confusing in this lecture, feel free to ask from me. Be soft.